I'm Tony Kaye, I'm the editor of Eureka Report. Welcome to Property Point, and I'm joined once again by Nerida Conisbee, Chief Economist of REA Group. Welcome, Nerida.
Thanks for having me here.
It's good to have you on the show again. I wanted to talk today about 2017. We've nudged into the first part of 2017. What are the early signs showing us, Nerida?
Well, 2016 obviously was a very strong year, particularly for Sydney and Melbourne. We saw record demand on our site when we looked in October and November, but we started to see a bit of a drop-off in December. So it's not that unusual. Like a lot of years we do see activity slow down, but what's different from the end of 2015 was that in 2015, December, we continued to see a rise in demand on our site. So there was more and more buyers looking in the market in December of 2015 than there were in November. So it really led us into quite a strong start to the year. This year's a little bit different. We saw that drop in activity in December. We obviously don't have the January numbers yet, but it does look like conditions, at least for the first quarter, will be a little bit slower than they were last year.
And where are people actually looking? What are the main areas that they're looking at?
It really is Sydney, Melbourne are the two main areas. We're seeing a lot of demand, but there's also Hobart is coming up really strongly. So Tasmania in general, but particularly Hobart. That's been continually growing since about mid-2015. So mid-2015 we saw Tasmania sort of on the average for Australia, but now it has surpassed Victoria and New South Wales. So it's quite unusual, and we think it's a lot to do with affordability. But another factor that does seem to be driving it is that we're starting to see more and more Chinese on the site, Chinese property seekers on the site looking at Hobart. So again, traditionally, they've very much focused on Sydney and Melbourne, but they're also looking at Hobart as well. So affordability is playing a role. Changing demand from offshore is also a factor. And we do think that those will be the key trends that we're going to be seeing in 2017.
Yeah, change demand from offshore is quite interesting, isn't it? How that's going to play through in 2017. What's been the early trends in terms of Chinese interest in the Australian market?
Yeah, it's still going up. So we saw a bit of a drop-off in mid-2016 as a lot of eastern seaboard state governments started to introduce taxes on offshore buyers. So that led to a drop-off. Since then, it's picked back up again. What's been a big change, though, last year was the way that offshore buyers have moved from apartment stock, particularly Melbourne, Sydney, and are now looking far more broadly at what can be purchased in Australian property. So it's included things like Adelaide seeing a pickup, Perth, Brisbane, but also moving from apartments to house and land. And I think that's been the biggest shift, that a lot of the really affordable house and land developments across Australia are starting to see lots more offshore interest, and particularly Chinese interest.
Another strong market was Canberra last year. What are the main factors driving that?
Yeah, Canberra is obviously an interesting market. We did see very strong rental demand in Canberra. So, a lot of workers going in there, perhaps temporarily, has led to a strong rental demand, but also strong buyer demand as well. So it was a little bit lumpy. We sort of saw it move up and down throughout the year, but it is a pretty small market, I guess, is probably one of the main points, that is quite sensitive to the level of supply.
One of the themes from 2016, I presume that will continue, is that there is a shortage of stock on the market, and that's having an interesting effect in terms of overall sales. Do you expect that to continue?
It's a little bit hard to tell at the moment. In December we started to see a bit of a pickup in listings, so that was obviously good news. It helped with the number of people looking to buy, which there was that really strong imbalance between listings and the number of people looking to buy. I think what happened last year is there was a few different issues going on. I think in Sydney and Melbourne, the market was running a little bit too hot for a lot of people to sell. So there was perhaps a little bit of a fear of missing out, that if you sold, you may find it too hard to get back into the market. So really, for upgraders, there was a bit of concern there. But also perhaps that a lot of people are very highly indebted at the moment, and they may have been less willing to take on a lot of debt. So, if things start to slow this year, then that will be good news in those markets. In Perth, we also saw a drop in listings, but again, it's starting to increase slightly in December. But Perth is again, obviously a weak performing market. I think the people, people are probably holding out for the market to start improving before they start to sell. But Perth is interesting, although, across the board it's still seeing declines in prices, low levels of demand. We are starting to see some of those inner west suburbs start to experience price growth. So very, very early signs, but I do think it will take some time still for Perth to recover.
What about the regional centres, Nerida? There's obviously a lot of people who are moving out of the capital cities because of affordability into some of those regional towns. Are we still seeing strong growth there?
Yeah, I mean, the big one is Central Coast. So at the moment, that does seem to be the key beneficiary of Sydney's affordability problem. We're seeing a lot of people look on the site there. We saw that come up last year as many of the suburbs there came up as the quickest selling suburbs. We're seeing them rise in popularity. So there's lots of things that seem to be going on our site, but also with some of the auction clearance rates as well. We've also started to see commercial property pick up in the Central Coast as well. So, lots going on as in regards to that area of regional New South Wales. Newcastle, again, that sort of saw pretty solid growth in prices across the board. We started to see quite a few suburbs hit more than $1 million median price in Newcastle. And then if you have a look at, obviously Gold Coast continued to see very, very strong demand last year as well. So I think Gold Coast is, a market to be a little bit careful of. It's obviously doing very well at the moment. You've had infrastructure spending done there. There's also been, there's the Commonwealth Games upcoming, but it is a market that does tend to build too much, and I think there's starting to be a little bit of concern around not so much projects completing now, but projects that may complete post Commonwealth Games. So so Gold Coast did very well. Victoria, regional Victoria did okay. I mean, certainly not as strong as Central Coast, but places like Ballarat, Geelong, Bendigo, did okay as a result of challenges with affordability in Melbourne.
Okay, well, it'll be interesting to see how the market plays out this year, that's for sure. Thanks for coming in again, Nerida.
Thanks for having me.
Anytime, and we look forward to you joining us next time. Thanks very much.